Hello traders, hope you're doing well. Welcome to my video on the boom and crash indicator. In this video, I'm going to show you a very simple strategy that you can use to capture moves such as this one for over 600 pips and counting. Okay, so the boom and crash indicator I have here on my Euro Dollar 1 hour chart in the MT4 MetaTrader 4 platform. You can use this strategy on any trading platform, you just need the boom and crash indicator. You can use it on any trading instrument as well, so Forex, stocks, cryptos, commodities, indices, etc., and any chart time frame. As I say, I always like to use the longer term chart time frame, so 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find the signals tend to be much more reliable, not just with this indicator, but with price action analysis, so support, resistance, trend lines, and also candlestick patterns as well. Right, now this indicator basically will display these bombs, for want of a better word. They do actually look like bombs. When there's either a high or a low, okay? So it's to try and tell you to sell high, okay, which we all want to do, and buy low, which we all want to do. And if you look at it in hindsight, if we just zoom out, when there's a blue bomb, okay, that's the selling signal, okay, because that suggests there's going to be an imminent reversal. And when there's a magenta bomb, which is this one, it may be different for the indicator you're using. There's some of them use arrows, I know, but the principle applies the same. When it's below the candle, it suggests that it's a reversal to the upside, so you can look to place a buy trade. Now, when you look at this in hindsight, if you look at the buy, the sell, the buy, the sell, it looks fantastic. It looks like, well, if I buy and sell every single time this tells me to, I'm gonna be onto a winner, surely. You know, it's gonna be like printing money. You know, it's fantastic. Let me tell you, this repaints. Okay, if you don't know what repainting is, that means it changes after the fact. So when you see this bomb down here, that's telling you to buy. Originally, this bomb would have probably been here. Okay, then it would have been here. Let me just use this cursor. So it would have been here. That this bomb would have been here, and it would have been here, and it would have been here, and here, and here, and here, until finally the reversal came, and then the bomb stayed there and said, okay, I picked it fantastically. Okay, this one down here could have been here, then here, then here, then here, then here, then here. You know, it repaints. Okay, so if you follow this in real time, you will see that it will not stay in one position. Okay, so don't get your hopes up looking at it like this and thinking, well, it's, you know, it's a magical unicorn indicator that's always going to tell me the ideal time to buy or sell. So for that reason, I would render it useless. Just going to get out of the way earlier on in the video, but you're not wasting your time because I'm going to show you a better strategy that you can use to time your entry and capture big moves for hundreds of pips. And how are you going to do that? Pure price action trading, okay? So you're going to draw your resistance and you draw your support. As I said, I'm using the 1 hour chart time frame. So then these levels tend to be more reliable from my experience just because they contain, as I say, more price data. So you can see the triple top formation here. This resistance is tested 3 times. Rejected, price fell down, broke through this trend line support to the downside. If you just zoom in here. Okay. Broke through here, then it held up as resistance, and this would have been an ideal time to enter on a breakout there. Nice M pattern formation. 3 inside down candlestick pattern there, 3 inside down candlestick pattern there. Market making lower highs. All we need is price action. Price action doesn't repaint. Okay, price action isn't lagging. It's telling you what the market's doing at any given time. Just a little bit of effort is required to draw your trend lines, draw your support and resistance, know a few candlestick patterns. I don't only take a trade if there's a candlestick pattern, but can give you a good confirmation as well for your trades and help keep you out of trouble also. And we could have taken that breakout trade. The boom and crash, to be fair, it does repaint, but when it does stay there as it is here, it's saying we're in a selling market. But did we really need an indicator to tell us that the market was falling when we could have just looked at the chart and seen exactly that ourselves? I've taken this trade on this breakout, stop loss just above the recent high, so around 10 to 15 pips, which is a really tight stop loss, especially for the 1 hour chart. And then as price fell here, I'd move my stop loss to break even. And then as price continued to fall down, I'd just move the stop loss above recent highs. So there. And by trailing the price, we can maximize each move as much as possible. What I wouldn't want to do is have 15 pip stop loss, see price drop down here and get excited and exit the trade. Granted, it's still a good trade, but you just left way too much on the table. You can, of course, re-enter, but the more you re-enter, the more chance you have of getting your entry wrong. I'd much rather use a tight stop loss, admit when we're wrong and get out. You know, if price doesn't fall and it reverses and we're taken out, we can afford a 15 pip or 20 pip stop loss multiple times, knowing that when we do finally get a good trade and get into a trend nice and early, we're going to milk it as much as possible and make back those losses and then a lot more on top as well. Okay, so in terms of re-entry or later entry, if you missed the first bus from the station, just simple strategy, trading in line with the trend, wait for a pullback and a breakout, and you can just enter there. Pullback and breakout. Okay. Pullback and breakout, support becomes resistance. Okay, probably in here somewhere you're looking, nice level of support there. M chart formation as well. M there, breakout, support becomes resistance, continuation. Okay, so there's ample opportunities to enter on this trend. Obviously, you don't want to end up selling too low. But again, you can always trade in line with the boom and crash direction if you want to use it that way to help keep you out of trouble. But I mean, when you see price down here, if you zoom out, if you're thinking of selling around here, you might want to think again, simply not because the boom and crash is telling you, simply because we've already had that big drop down there. Okay, and there's ample opportunity to get in on this trend early. As I said, we would have ideally been in here and here, here at a push. Don't see why we want to sell at the low. Okay, you can just look at another instrument or time frame to trade. Okay, same principle. Once the trend continues, just zoom in there. You can just wait for your pullbacks, your levels of support, your lower highs, and that's wedge formation, breakout there. That's perhaps the aggressive entry. If you want to wait for confirmation of the trend, you can get in on the next pullback down there. Okay. Perhaps even as far down as here. Then this level of support, you can see it holds up well as resistance. Continuation of this trend. Okay, so I know this is the boom and crash video. If you take anything from this video, just let it be that the indicator repaints. And you don't need to, assuming that maybe you're trying to trade 5-minute, 50-minute charts. I may be wrong, but perhaps look at a longer term chart time frame like the 1 hour, 4 hour, and you just find that moves like this can be quite easy to spot with a bit of practice. Just know where to draw your support, your resistance, your trend lines. Your candlestick patterns have good money management, good trading discipline. Don't let negative emotions like fear, anger, and greed cloud your decisions. Okay, don't revenge trade, don't overtrade, don't get fear of missing out. Have a trading plan and stick to it. Okay, enough waffling. Let me just show you in an uptrend. So we got market making higher lows. We know we're in an uptrend. Okay, level of resistance here. Just zoom in for you. See level of resistance here. Breakout to the upside. And we can get in on this trend there. Higher lows. Higher lows, wedge formation, breakout to the upside. Okay. Same again here, you got W formation, breakout to the upside, support becomes resistance, becomes support, continuation, aggressive entry, or you can wait again, pull back there. Pull back here, big breakout candle. No coincidence. When traders see the market making higher lows like this, we've got our boom and crash up signal there. As I said, it repaints, so it could have been up here initially. Obviously looks good in hindsight, but nonetheless, we know we're trading long because the market's making higher lows. So wait for a pullback, trade the breakout. Wait for a pullback, trade the breakout. Even up as far as here, pullback, breakout. And even here, pullback, big breakout candle. But by then, you've got to think we might be buying too high. We had ample opportunity. Even perhaps around here. Okay. You can see the market make these high lows up here, lots of bullish price action. yeah, plenty of opportunity to be had with good timing and good money management. You too can create a winning trading strategy, trading in line with the overall trend. Just try not to rely on lagging or repainting indicators. Hopefully you found something useful in this video. If you can like and subscribe, that would be great. And I hope to catch you on the next one. Take care.